Hello, everyone. How is everyone doing today? How's everyone doing? What another fun day. Another fun day. Let's see, it's going to be a little different this afternoon. Happy Friday, Patrick. What's this? They updated my Ecamm software. Well, I updated it because there's a new release out. Huh. I could double. Ooh, I'm just looking at some new features. Hello, Jacob. What's up? Can you look at coffee, platinum, and crude? I'll definitely look at crude. How do I get that off my screen? Hello, Josh. Then how do they live through the winter, Coco? Bears can't survive winter. Well, I think a lot of bears survive winters. They hibernate, but they do survive. Else we'd have no more bears. Tesla call hits made money. Bob said, Bob, Bob's not here. This is Mike. Bob's not here on Friday afternoons. It's just Mike. You just get me. It looks like people are buying like there is a pivot. It's not about stomping or doing anything. Again, we're in a tactile trading market. I think we could be approaching a short-term top, yes. And we're getting a lot of, for people who follow DeMark stuff, a lot of DeMark exhaustion signals on the shorter-term charts. Not on the longer-term charts yet. But they could roll into some bigger moves. Hello, Options 22. Crazy markets. Well, Tesla's an example of that. Howdy, Jack. Coco thinks the ES chart looks very bullish. Sorry, Mike, did the 200 moving average hit and reject on Tesla? That was on the weekly. On the weekly. Where's my Tesla? That's my monthly. We went through it on the weekly, and we're into the weekly rotation zone against a major resistance level. Can it still pop higher? Sure. It can still pop higher. The next major area, if this continues with the massive options and what's Tesla making up 7% of the total options volume at this point? It's back to massive gamma squeeze in Tesla land. So just let it play out. If you could ride it, I'd be careful jumping on the train too late, but that's where that stands. What is its PE ratio back to? 50. Very interesting. What are the reasons you would not make it a trading idea for members? Because it does not trade rationally. I know a lot of members watch this. I was watching for a return to the weekly rotation zone, which it's done with a vengeance. Why don't I make it a trading idea? I don't think it's appropriate for a lot of people to be trading. A lot of people will get burned. So it's, if you're a nimble and you're more like a short-term or even aggressive swing trader, fine. I don't think it's appropriate. I don't think a lot of things are appropriate. Can things move? Yeah. But if you're not a great trader, unless you get on the massive call juicing thing for months, it's just not a great trade. It's a momentum trading stock, but that's about it. It's not a sanely traded stock. I'd rather put out stuff, again, that should be watched from a more sane perspective, not a get-rich-quick perspective. So, a stock that is up, 70, close to 80% in 3 weeks. After still on reduced guidance and for even production next year, which everybody said, well, they cut car prices, and so they're going to hit 1.8 million. Well, they were already projecting, I think it was before that, was 1.9 something before they reduced prices, and then they were projecting 1.8 on reduced prices. Again, is it tradable in the short term? Yeah. Would I want people piling in this for a long-term investment at this point? No. There aren't a lot of good long-term investments right just yet. That's why I like to focus at this point on some key dividend plays while I'm waiting. It sort of rolls into what the title of this is. Good evening, Anissa. By the way, if you're going to get back to 200 simple, it'd have to get to 233. So that's why. I mean, there's a difference between, and everybody thinks I'm super bearish. This is trailing mode on the S&P. You know, I've even updated some key levels for people should it run. I'm watching for a pullback, but even a pullback at this point would not be overly bearish unless we really start breaking below about 3,900. And that's minorly bearish. So I don't know why everybody thinks I'm bearish, because I think systematically nothing's guaranteed, but systematically, based off of valuations and longer term technicals, the low is not in. Could we theoretically, because nothing is 100%, make new highs? Yes. Will we get warnings before that? Yes. Is it still in trail mode? Yes. Even if we get a pullback next week that doesn't violate key levels, is it in trail mode from a long perspective? Yes. Why is it not from I said a long perspective, from being long, not from a long-term perspective? We still have incredibly high valuations on a lot of stocks. Even they're bouncing, roaring back in the NASDAQ. The things are being chased like, hey, we're back in full-blown growth mode. Valuations are getting ignored, and things are getting chased higher. I'll give you an example. I know somebody asked AMD. For example, I'm talking about a long-term portfolio. Would I be slamming a long-term portfolio? Is something I'm not going to touch for at least, it's not going to be traded in and out for a year at least. A lot of times longer. That's, first off, I should define that. That's a long-term portfolio. So I'm looking for things that have good valuations, that have triggered long-term buy patterns. Long-term buy patterns are weekly to monthly patterns. And then I'm not adjusting it very often. They also, at true bear market bottoms, should have better valuations. These valuations, yes, they have pulled back from the peaks of last year, but they're still incredibly lofty. So I'm not taking, when a lot of risk-free stuff like laddering T-bills, keeping, 4.6, 4.7, we'll probably get even closer as the Fed hikes a couple more times to 5, do short-term ladders and T-bills, and then as we get to better insane valuations and more long-term bottoming patterns, roll out of T-bills, roll into more long-term investments in stocks. Okay? Because everybody's like, oh, well, look how much it's up over the last week. Like, they're going to capture every 2-week move and you're going to call the top and you're going to call every bottom. No, you're not. No, you're not. So, like, for example, AMD. Is it a long-term investment for me? No. It's not a great long-term pattern yet. Could it rally? Yes. But here, even you get some PE ratios, and this is just, I just grabbed that one because I look at more than that. I'll look at a lot more than that, but I'm just using that as a thing. Semiconductor stocks have warned multiple times. On PE ratio for AMD is very lofty in non-growth mode or reduced growth mode, paying 45 times. And if it rallies, that's going to keep getting higher. especially when earnings could decline still over the next couple quarters. Now, that being said, so it's not a long-term buy pattern technically. It's not a long-term buy, and that's not the only fundamental I look at. It's just one I can show up here real easily. However, let's say there was a close above 80 on AMD. Is it a short-term tradable pattern? Is this going into my long-term portfolio? No. Could it be a short-term tradable pattern to take it even back to more insane valuations? Yes. So there's difference. So there you go. But it's not something I'm going to slam in a long-term portfolio and walk away from. When I'm talking about a long-term portfolio, like even in Apple, I'm talking about major key buys. There was a major key buy back in like February of 19 for Apple. Okay, do I still have that up? Let me see something. Apple PE ratio from 19. Yeah, here we go. All right, like Apple's PE ratio now, it's not absurd, but it's, 23.5, and as it keeps rallying, it's going to keep getting out of whack. In February of 19, let's just go to about March, it was, it's somewhere between here, because you see December was 12.45, PE of 15. That's somewhere between there. Fantastic. Very good long-term PE ratio for Apple, and a longer-term buy signal that doesn't have to be touched for a very long time. Apple right now, are there still tradable plays? Yes. Is this a long-term slam it in a portfolio? No. And walk away. Could Apple still continue to rally? Yes. As PE climbs. This is not a long-term buy area yet. And it's not a long-term. I'm just showing one example of a metric. Just like AMD. Not long-term. Even the insanity with Intel's guidance was horrible. I'm actually surprised. Here's how insane everything is. I figured this thing would get a bloodbath today, and people just running in to buy Intel. I mean, this thing will probably go back down easily over the next few weeks and test is 24 to 25. But just a snapback with like Intel, they gave horrible guidance, and their earnings were ugly. Does not mean I don't like Intel anymore. I like it on a core trade around a position. But Intel, just for me, why do I call it trading around a position? Because it's not just buy Intel, buy a lot of Intel and slam it in my portfolio and just walk away. Else I'd say long-term investment. This is something, don't even bother touching it. But that's not even at that position yet. So, these plays, yes, we have bull plays, we have rollover plays. When we're going to take out the lows from last year, don't know. We don't have a major topping pattern just yet. We roll over next week. Do we have a major topping pattern triggered? No. Not yet. Got lots of key support has to get through. Am I watching for a pullback move next week? Yes. We almost got to a minor blow off top today. Is a pullback, and not unless it turns really bloody really quick. Then, but it's got to break some key levels without a key pattern. So, until then, even on a pullback to 4,000, that's just a pullback. doesn't break the short-term rally. Short-term rally, we're still up. Okay? Still got the rotation zone rising. Next key areas, and this could be after a pullback next week, 41.21 to 41.31. Then we're looking at 41.78 area, 41.80. Then we have another cluster, 42.23, 42.64 to 42.78. So, tradable moves. Now, if we start breaking key levels next week and the pullback turns bigger, then we'll have to reevaluate. The NASDAQ also, I raised the harmonics. Just wanted to point that out here. We're in to a key rollover zone, a potential key rollover zone, but it's got to do a lot of technical damage, especially get back even through 11,950 before we even begin to do technical damage. Could it rally even higher? Sure. 12,519, 12,841 to 12,926. Easily. Could it get above there? Next target would be 13,322. Even if it gets up there, does that mean the lows are in? No. That's a tradable rally. It's a very tradable rally. Let's go off the low close area. I mean, so far from the low close, we're up 15%. We could rally up here, be up 20%. You've seen these kind of rallies before rollover plays. We could rally up here and be up 25%. Doesn't mean that that's locked in. Doesn't mean it can't roll over. So it's in trail mode. Now, if we pull back here to a rotation zone and get a percent B or a rotation buy back up, still a potential long trade. But the valuations on the NASDAQ aren't sane. They're going back to more insane. Based off a price to sales ratio, which has come down substantially, but it was in super mega bubble territory. It's still in bubble territory. So am I looking to slam a bunch of buy like the Qs and walk away for a few years and say I'll come back in 10 years and see where the Qs are? No. Maybe I shouldn't say 10 years because you'd probably be higher. You'd be probably higher in 10 years. But in 5 years, there's no guarantee at these kind of valuations. There's no guarantee. Where's the double bottom invalidated in Intel? Below about 26, 25. If you hit this final target on the double, it's invalidated. And it never confirmed or triggered. Does that change my outlook? Does that change the way? No. That was just something that if this double from trading around a core position, I talked about this before. If the double triggers, what do? I'm much more patient in lightening up on the move. I give it a lot more room to run. Until that happens, you get into the high area, unwind something. You get into the low area, look to re-add it. And there could be multiple unwinds in here at key levels and a couple different adds. So that's the reason that pattern interested me. So I mean this is so interesting because I've got, especially today, I got a number of emails. People reach out via support and other stuff, then letting me know that I shouldn't be bearish, that the lows are in, and sending me videos, sending me articles, sending me why we're in a new bull market and I should expect new highs. If you want to have that viewpoint, that's fine. I don't care. It's your money. I'm just trying to teach something, and when things shift, I will shift with them. I'm telling people why, because I know a number of people watch these videos who send me stuff, why I'm not a long-term bull yet, why it's still tactical trading. I can be a short-term bull. People are buying earning misses like no tomorrow. Earning misses, I think there was Zero Hedge, I think, put out a good chart on that. Some stuff Zero Hedge has gotten really crappy with over the last year and a half, but sometimes they still put out some good things. Where was that? I have to look for that. With the earnings miss versus earnings beat right now. People are buying absolute crap. Oh, here's a good thing. By the way, if you didn't read the latest Hussman article, here's your price to sales ratio, historical price to sales ratio. Here's a good chart. So yeah, have we come off our peak? Yeah, but this is historical. Here was the .com. And this is the S&P, so this didn't even take into account the NASDAQ. This is S&P. This is the ramp up. This was great financial crisis. This was COVID. This is where we went to with all the juicy juice in the market, and we're trading back at the same levels as peaks before. Peak here, right before the COVID thing. Peak here. This would normally be peak price to sales territory. Instead, it's being viewed as a bargain. It's a bargain. It can only go up from here. Well, yeah. Theoretically, do I want to slam it into my long-term portfolio, buying lofty stuff like this, when we can easily give better valuations in the future? No, thank you. I will wait and just tactically trade until then. I will tactically trade. Here, from Zero Hedge. Median excess return versus S&P 500 on day after earnings report. These were EPS beats. Look, down 81 basis points after a company beat. Miss, EPS miss, up 140 basis points after a miss. People are buying misses like no tomorrow. You know what? When things are missing, they're missing for a reason. And these are already on slightly dialed back. They can miss even worse next quarter or the quarter after. This is not a healthy long-term environment. Companies that are still beaten, even on dialed back stuff, are hey, we don't want any of that. But boy, you missed? Good. Give me some of that. Give me some of that. I don't want it. Is it tradable? Like, was Tesla tradable through this back to the weekly rotation zone? Yes. Is it a great long-term investment? No. So, there are trading opportunities, and then there are long-term investment opportunities. The market, as I've said, and Bob's talked about this too, I think it's priced to perfection and beyond. But that doesn't mean it can't keep rallying. Stupid can get more stupid before stupid gets smart. Well, what ARK is flying to, yeah. And what did Kathy say? This is the best buying opportunity of Tesla. Tesla's going up fivefold again? Okay. You know what? I don't know what you're on, but that's absolutely ludicrous. Could it still go higher in the short term? Yeah. Until it gets some kind of rollover pattern again. There's a cup and handle on the ES. We don't know, that handle's way too low. It would need to be a pullback, and then you need a pullback closer to the highs up in here. The good one, if you want to study this was more so a cup and handle. Sippy cup. So, and it looks like it was finally triggered. So now we're going to watch for a short-term pullback and then a resumption of move in the NASDAQ. I mean, in the Russell. Little end of week. Did this invalidate anything in crude? Nope. Still sideways correction. Holding bottom rotation zone. So, still watching for, this is, now we're finally getting the cycles to the bottom. Now, if crude closes back, technically, closes below 74.36, then the pattern's over. Until then, it's just a pullback. So, let's see something. Have to look at something. So I hope that clarifies a bit more of my perspective on long-term investments that I don't want to touch versus tactical trading. Just like other things, tactically trading, still precious metals might turn more into a longer-term investment. Uranium's still tactical trading. Could very well, at some point, turn into a major long-term investment. Yeah, that was before. If we can just check at it, but it was not a double. Still. Be interested to see where it closed on the weekly basis, though. Interesting enough, this was another clear rotation down. Doesn't look like it triggered, even if you missed that, which it still wouldn't be valid. But 2058, where'd it close? 2052. Nope. Still also rejected from the breakdown level. That's sort of funny. ES inverse head and shoulders on the monthly chart. I'd have to see if this shoulder qualifies. Also, would it be reversing? I don't know if, let's just assume for now. Let me just see. I want to see where the targets would be. Yeah, it looks like that would work. I'd have to see if this does qualify. And that's on a weekly. On a monthly, you don't have a rotation. It's only on a weekly chart. What pretzels? What pretzels, Happy Jack? I'm not worried about buying the low. George. I'm not worried about buying the low. I said when patterns trigger. I'm not worried about saying I'm going to buy the low. When did I say I'm worried about buying the low? I did not worried about buying the low. Why am I saying here that I don't want to tie up investments when valuation models and when long-term models don't warrant it? Because I don't need to buy, let's say I don't need to buy the S&P at 4,100 if we're going to 3,000 and then bouncing back. I'm not trying to pick the low. What I'm trying to do is not tie up money when I can put it into short-term bill ladders and earn at least a decent rate of return. Why should I keep money tied up? See, you're still missing the concept. Let's say we go to 4,300 and then drop to 3,000. And all the people who thought the lows were in are riding it back down. And let's even say people got in at 3,900. Ride it to 43, ride it back down to 3 or lower. Let's say we go to 3 and then, okay, we're watching for a bottoming pattern and all right, we have a long-term bottoming pattern, better valuations or a likelihood of a long-term bottoming pattern, and I'm not in at 3, I'm in at 3,400. Well, I haven't gone through all this back and forth. Meanwhile, I'm keeping long-term investment liquid in not so bad rate of return. Because it's a risk-free rate of return. So let's say I'm in up here, 3,900, ride it up here, but don't get as you know what, I'm in a long-term portfolio, so I'm not going to just get out if we get a topping pattern at 4,300. We ride it back down to 3,000. Then I got to wait for it to get back to 3,900, which could take months. Meanwhile, I've lost that decent risk-free rate of return. So there's a big difference in buying the low. I will not buy the low. And I'll tell you why I will not buy the low. Even if there's a capitulation flush out move, I will not be buying the low of that day. Because I won't know it was a capitulation flush out move and where the low was until after that day is done. And then I'm still looking to buy the secondary reaction. Big difference. For example, from the COVID crap, we did not know the low was going to be the low until we at least got a retest of some key areas in there. Okay? For example, the low was 2174. This was a great confirmation buy. Even let's say you got in the close here. All right? 2779. Did you buy? 2174? No. You bought here. But I guarantee you also, for the people who are looking to buy here, they didn't sell here. They didn't sell the absolute high either. But let's say great reversal signal here with the Fed flooding the markets with liquidity and a multi-week bottom put in. So you bought the low here, or not the low there, the close there, and got out, when you started breaking some of these very key levels. 57%. You didn't buy the low, you didn't sell the high. Because you're not going to buy this tick and you're not going to sell this tick. And for some people who had orders in place who did happen to buy that tick, I guarantee they didn't hold it the whole way up here. They could have been out a day later. And then what's even more amazing, if you want an even safer strategy, here's where greed comes into play. You know, even when you take out the prior highs on a monthly basis, if you just wait to do that for a long-term portfolio, and then have halfway decent exit positions on a big trailing basis, wait for monthly reversals, fine. You had the sell-off, you didn't get back in, until April, but you could have rode a hell of a lot of this higher, so you didn't buy here, you bought here. Oh well, at least in this environment, you're still getting a decent risk-free rate of return. First, when they kept interest rates at levels of stupid. So you want the real save. Hey, but I didn't buy here. I had to wait till it got above this 4,800 again. Yeah, well, maybe next time it gets above 4,800, we're going to be on another long-term tear. It might not happen for a while. There'll be other things that alert us that, hey, we could get in before that. Not saying you have to wait for new highs to buy. There's easier ways to see things changed. All right. Blow off top. It was starting to look like it this afternoon. I'm going to be watching, but this does not have to be a major top. Again, not calling for a major top because we have to get through a lot of technical levels before. A lot. So could a minor top turn into a more significant top? Yes. But it's just like people who say, oh, my 5-minute double bottom called the bottom. No, it didn't. And your 5-minute double top isn't calling the long-term top either. It's a trade. It's not a long-term signal off a friggin', I get that all the time. Oh, my 15-minute chart called the top of the whole move. No, it didn't. Because you did not know it was going to be the top of the whole move off a 15-minute friggin' chart. That's completely inaccurate. That is a completely inaccurate statement, Coco. I don't even know why you show up here. You can't time the market. I don't think you can reliably call all highs and lows. You can time major rotations in and out. Lots of people do it. Lots of people do it. I don't even know why you'd watch a channel like this if you're saying you can't time the market. Then what are patterns? We've seen them. I got patterns that trigger even stuff I put out here that have been, if you go back and look over all the patterns, I used to track it for a while. They were, at one point we were running 77%. If we're running 77% with a decent reward to risk ratio, what's that? That's not a fluke. That's statistically important. You can time the market. You can't time every move in the market. And I've never said you could time every move in the market. Just like every move's not your move. Every move is not tradable. I don't need to respond to some of this. Ralph, how come Empora was buying at 16 in 2013? Again, you don't have to buy the low and sell the high because you're not going to. You get back even to, look, and we could be in for something again like this. I'll show you another thing. If you look, we could be in for another, like, how long was this? Highs at 2000, right? Retest the highs 7 years later. And then another sell-off. So this was a huge range-bound market for a very long time until it broke out in 13. Were there trades within here? Yeah. But you could have ridden it up. You could have ridden it down. Could have ridden it up. You could have ridden it down. If you weren't going to adjust anything with your portfolio, let's just say you bought the spiders. Meanwhile, I don't want to sit. If we could be in another longer term pattern where we do not, we could go retest highs, can even eke out slightly new highs, and then we could have another rollover. And I'm not talking anything with the lows from last year. I'm talking even bigger than that. We could head down to some key levels, rally back up to 4,800, come back down to 2,800, rally back up over the next few years. Nothing says that we have to do what, it took a long time to break out of the highs from 2000. And this is just in short. I wish I had charts that went back farther, because you start studying things from other decades, you can see it's not always a rip-roaring bull market. In a macro, you'll have bull markets within a larger consolidation pattern. So, Sean thinks Fed will ruin this party with a 50% basis point hike. If they did 50 basis point hike, that would put a little damper on the go-go juice. That would catch the markets off guard on Wednesday if they did a 50. Yeah, I would give them a big wake up. I'd love them to do that, because then it would be like, hey guys, your financial conditions easing too much. Financial conditions keep easing also. You get the possible slingshot rebound in inflation, which is what they're trying to avoid. So I'd love them to do that. I don't think they'll do it. I'd love them to really kick the market in the you-know-where, because it's like, all right, you think you can outguess the Fed? Everything's fighting the Fed. And as I talked about that with Bob, that was one of the first things I learned as a professional when Greenspan took over. Don't fight the Fed from both tightening and easing. Just because you think something should happen, they can it. Now we got this. What the problem was is we got the Fed put mentality in, which is why people are fighting the Fed. Oh, when the going gets rough, they'll take the rates down, they'll loosen up liquidity again, and we'll be off to the races. So you know what? Timing doesn't matter, and that's where you also have this. It's taken years to get here, but that's why I keep hearing from people, even professionals on the street, valuations don't matter. Valuations don't matter. Why? Because valuations don't matter because when the going gets tough, the Fed will just open the spigots again, and we'll get free cheap money, and we'll get liquidity behind the market, so don't worry about valuations. All right. Okay. I'm just going to jump over a lot of comments here. I'm not going to get to a bunch of stocks. Are we in greed mode? Oh yeah, we're in greed mode. Hey, you're welcome, Jason. You're welcome, John. Just trying to give some perspective. So separate tradable moves versus, again, and you define your portfolio how you want to. Some people don't have long-term investment portfolios. Some people only have long-term investment portfolios. If you only have a long-term investment portfolio, I'd be really picky personally, and I can't give you, I'm not your financial advisor, but I would not be chasing for long-term stuff here. For the most part. I'd be literally taking advantage of what I talked about, T-bill ladders and other stuff. If you don't have long-term investments, everything's on a shorter-term horizon for you, then everything's still tradable here because you're not really worried. You're trading the patterns. So, you don't really give a crap if AMD is trading 45 PE or 52. If there's a buy pattern, then it's a buy. If it's a breakout buy, whatever your patterns you're trading. But if you're looking to hold AMD for the next 3 to 4 years, it's a different story. Do you see any do I see any good stuff? I'll be looking for some. I'm going to be looking after our next pullback again because we are a little. And no, I do not like CSX here, by the way. I do not like CSX here at all. And I'll tell you why. I'm watching for a secondary reaction. If we put in a more stabilizing bottom down in here, rather than just a spike bottom, I'll look at it. Okay, I'll look at it down in here again, or it has to prove it can get above this key. This was a pretty substantial breakdown for a lot of reasons. So, and then if it closes below 28.62, I'm not interested unless it gets back down in this range. So no, personally, I wouldn't be, because there's no fantastic bottoming pattern. Theoretically, if we drop a little next week and come back down here, could it form a shorter term double bottom? And then look where the peak is. It would be a lower probability one. It is not even formed yet because it's against the daily rotation zone and the 4-hour, and it could just pop into here and roll over. But at least there'd be a potential bottoming pattern. Until then, that would not be a super strong chart at the moment. Could it form something in the next week or so? Yeah, but not yet. And because something, what did I show you a bit ago? What did I show you was getting, here I can still call it up. EPS beat. They're getting hammered. EPS miss. Buy it like it's going out of style. They beat on earnings, missed on revenue, but I came in pretty close on revenue, so we'll give them a neutral beat. And got sold. But you also have potentially slowing rail traffic again going into the next couple quarters. All right? But stuff is still getting punished more so than the crap that's missing, and then let's just buy it. All right. I'm going to call it a day. I actually went longer than I was supposed to because I had to run out to a meeting. So I need to, I'll be back on Sunday. I will be back on Sunday, and we can look at some other things if you want to tune in then, 3 p.m. Sunday, and we will take a look at things then. You have a fantastic weekend too. Again, other stocks come back on Sunday and ask then. With that, everybody have a great weekend, and I'll see you then. Bye for now.